Hi, everybody. This is Mark from Mx3, bringing you a special report. So whenever there's any type of activity that happens in the crypto market that's out of the ordinary, we try to keep you up to date and give you any type of breaking news that happens in the crypto market. So I'll be bringing you a special report today. And today we'll be talking about the impact of the banking industry. Turmoil on crypto markets. There's been so much activity that's been going on in the crypto market that we wanted to be sure to bring you up to date. So Silicon Valley Bank, which served much of the startup industry in the United States, was closed by the Federal Deposit Insurance Corporation, or the FDIC. After a bank run led to an abrupt liquidity crisis, days later, Signature Bank, which had been one of the biggest banking providers to the crypto industry in the United States, was also closed by the FDIC. But as the banking meltdowns continue to dominate the news, Bitcoin has gained more than 15% since March 8th, 2023, when the trouble started at Silicon Valley Bank. So here's a closer look at the banks that started the banking industry turmoil. Silicon Valley Bank was the 16th largest bank in the United States, with $209 billion in assets when the FDIC closed it March 10th, 2023. Roughly half of all venture capital-backed startups in the United States held money at Silicon Valley Bank. The bank had been preferred by startups because they often allowed easier access to capital compared to traditional banks. Signature Bank, which had more than $110 billion in assets at the end of 2022, had some exposure to crypto companies, including Coinbase, which expects to fully recover funds, offering them 24/7 instant settlement services. A key advantage for always open crypto markets. Much of the bank's growth in recent years had come from crypto industry related deposits. How did these banks fall so quickly? I'm glad you asked. Silicon Valley Bank's fall was tied to years of near zero interest rates, a highly concentrated deposit base, venture capital-backed tech startups, and the speed of social media. With low interest rates and plenty of venture capital and tech company cash in hand, Silicon Valley Bank poured money into low-risk, long-term bonds to try and earn money. But when interest rates began to rise in 2022, sinking bond prices, Silicon Valley Bank's bond holdings began to decline in value, while at the same time, a slowdown in venture capital funding, along with increasing macroeconomic pressure, led companies to withdraw more money than normal from Silicon Valley Bank, forcing it to try to meet demand by selling some bond investments at a $2 billion loss. Among tech industry circles across social media, this news set off fears that Silicon Valley Bank was in trouble. And since most deposits at Silicon Valley Bank were uninsured due to exceeding the $250,000 FDIC insurance limit, clients rushed to withdraw funds from the bank at the same time. $42 billion in one day. Forcing the government to take control of the bank to protect depositors. Signature Bank's closure was essentially contingent from Silicon Valley Bank's bank run. Since most of Signature's deposits also vastly exceeded the FDIC's $250,000 insurance limit, many depositors moved to get their funds out. This led regulators to seize the bank out of fear of broader contagion, despite Signature executives believing they had enough capital to meet all withdrawal requests. What's the impact on the crypto markets? Well, Bitcoin quickly fell March 9th, 2023, as fears grew about Silicon Valley Bank's collapse and the potential for larger contagion throughout the financial system. And USDC, the stablecoin run by Circle, also fell below its $1 peg because more than $3 billion of its reserves were held at Silicon Valley Bank. Circle unable to process some redemptions over the weekend of March 11th and 12th. By Sunday, March 12th, after days of uncertainty, the federal government stepped in and promised to guarantee all uninsured deposits at Silicon Valley Bank and Signature Bank. By the time markets opened on Monday morning, March 13th, Bitcoin was already recovering and USDC was back at its $1 peg. On Tuesday, March 14th, the release of the latest consumer price index showed that inflation fell slightly in February. This lower number, in combination with the banking failures, left some investors optimistic that the Federal Reserve wouldn't continue to aggressively raise interest rates, helping to send Bitcoin above $26,500, a 9-month high. As one analyst put it to Bloomberg, and I quote, "While dark clouds sit over Silicon Valley, Bitcoin is booming," end quote. Let me just repeat that. While dark clouds sit over Silicon Valley, Bitcoin is booming. Now, despite the banking industry's financial turmoil, the cryptocurrency market's resilience amid a largely risk-off environment can be seen as affirming part of its original thesis. Bitcoin, in particular, was developed in direct response to the 2008 financial crisis. In particular, its bank bailouts, with the goal of providing anybody with a digital currency that can be controlled by any centralized financial institutions. Bitcoin's beauty lies in its ability to store value in a decentralized manner backed by math, without requiring humans to validate or support it. As Tatiana Kaufman put it in an op-ed for CoinDesk, Bitcoin, said Kaufman, was made for this moment, and it seems the market agrees with her. Let me repeat that. Bitcoin was made for this moment, to be able to offset the financial market. That's one of the reasons why Bitcoin was created, and it was created out of the 2008 financial crisis. In particular, the bank bailouts. Does that sound familiar? Because that's exactly what's happening right now with Silicon Valley Bank and Signature Bank. So we wanted to bring you that update on the impact of the financial market going on with the impact that it has on the cryptocurrency market. So be sure to like and subscribe to catch the next Mx3 Crypto Report. And as always, be sure to keep it crypto.
Tomorrow can be a better day. If you're looking to get some figures for better pay, invest in yourself, man, that is the only way. Get your clout up, 100K followers. How you do that, man? By not being a follower. How you get there, man? Hustling and bustling. Then you spice it up, put some